Have you ever looked at a company and just felt like, the market's missing something here?
Definitely.
Like there's this, hitting value just kind of sitting there waiting to be noticed, maybe in assets that aren't even their main thing.
Absolutely. It's a classic situation, isn't it?
Mm.
And often, yeah, those overlooked parts, that's where the real opportunity might be hiding if you're
Yeah.
willing to dig a bit deeper.
Exactly. And welcome to the deep dive. Today, that's precisely what we're doing.
Hmm.
We are zeroing in on Centerra Gold. You will find them on the TSX as CG and on the NYSE as CGAU.
Right.
Our mission today, well, it's to really unpack this argument that Centerra Gold might be, significantly undervalued, not just because they have solid operations,
Which they do.
but and this is key because of some strategic, maybe less obvious assets that, well, maybe aren't getting the credit they deserve.
Yeah, and to figure this out, we've gathered quite a bit of material.
Yep.
You've got the Q1 2025 earnings call transcript, their latest financials, market data from places like Alpha Spread and TipRanks,
Good stuff.
and also the company's own MD&A documents. That's the management discussion and analysis, where they lay out their results and thinking. So we'll be looking at what management's saying, what the numbers show, and how the analysts are seeing it all.
Okay, perfect. So let's dig into that bedrock first. Centerra's basic strengths.
Okay.
Their Q1 2025 earnings call really showed, well, pretty strong operating performance, and they seem confident about hitting their full year guidance.
Yeah.
Looking at those results, what jumps out at you first as like real evidence of things running smoothly?
Well, the first thing that really stands out is just how consistently they're generating free cash flow.
Cash flow. Always key.
Always. I mean, we're talking about a company that boosted its cash balance by $35 million just in Q1.
35 million. Okay.
Yeah, bringing their total cash up to a really substantial $648 million.
Wow.
That kind of cash on hand, it gives them huge flexibility. It signals a pretty healthy operation underneath.
It's interesting, though, because when I first glanced at the Q1 financials, I did notice net earnings were $30.5 million, which is down from $66.4 million the year before, Q1 2024. And the earnings per share, that also dipped $15 compared to 31.31.
Right.
So someone just looking at those top numbers might think, wait a second.
And that's a really important point because, yeah, headline numbers don't always tell the full story.
So what's the context there?
Well, the documents explain that dip was mainly because earnings from mine operations were lower at Erksut and Mount Milligan.
Okay.
But, and this is the important part that was significantly offset by a few things, they got higher prices for their gold and copper.
Good timing.
Exactly. Lower production costs at Erksut helped too, and the Langeloth facility actually performed better financially.
So kind of a balancing act then.
Precisely. It shows they're adapting,
Yeah.
managing parts of the business to counter challenges elsewhere.
Okay, now let's talk about Mount Milligan, because the operational story there sounds, well, pretty compelling.
It really does.
Paul Tomery, the CEO, he was pretty enthusiastic on the call about their M+ program, said they're aiming to make Mount Milligan a top-tier global asset. That's a bold claim.
It was a big goal, yeah.
So what is this M+ program really about? What are they actually doing?
So M+, it's not just, a marketing slogan. It's a really comprehensive plan to modernize Mount Milligan, optimize everything.
Okay.
They're seeing improvements basically everywhere, safety included,
Mm-hmm.
and they're targeting something like 10% in actual hard cost savings through these continuous improvement efforts.
10% is significant.
It really is. And they're also working hard on improving overall recovery, optimizing how they sell their concentrate. They're even trying out lower copper content in the concentrate.
Why would they do that?
Well, the idea is it leads to better overall gold and copper recovery in the end. Tomery actually called it a little bit of pain for a lot more gain.
I like that.
Yeah, it shows that strategic thinking, right?
Yeah.
Willing to adjust things now for bigger long-term efficiency and better quality output down the road, investing in the future.
Makes sense. Now, beyond the gold and copper, Centerra also has this molybdenum business, which honestly sometimes feels a bit overlooked.
It often is, yeah.
What's happening there? How does that piece fit into the bigger picture?
Well, the mall unit actually has a really clear three-part plan they're working on.
Okay.
First, there's the Thompson Creek mine restart. The feasibility study for that is moving along, should be ready near the end of the year.
Right.
And they've already moved a huge amount of waste, like 9.6 million tons. And get this, They hedged their fuel purchases below the cost assumed in the feasibility study.
Oh, smart move, locking in savings already.
Very smart. Shows good planning. Second, they finished optimizing things at their Langeloth facility.
Yeah.
A set of contracts that should make it much more profitable. Well, crucially, the roaster's profit isn't really tied to the fluctuating spot price of molybdenum anymore. They basically get a steady dollar per pound margin.
Ah, so it's more predictable.
Exactly. So when it's running at full capacity, that steady margin adds up to a really substantial and, importantly, predictable profit stream. Doesn't matter as much what the moly market is doing day to day.
And the third part?
The third part is a broader strategic process for the whole molybdenum unit. They're looking at different options for its future that's still ongoing but advancing well.
Okay, so lots happening there too. These operational improvements, the cash flow.
Yeah.
How does this all roll up into their overall financial health? Like beyond cash, is the balance sheet solid?
Yeah, absolutely. If you look at the bigger picture, analysis tools, like Alpha Spread, for instance, they actually categorize Centerra under things like high solvency.
High solvency, so they can cover their debts long term.
Exactly. It points to a really robust financial position. Alpha Spread also mentioned, there was a big hit to working capital back in 2023.
I remember reading about that.
Right, but they called it a transitory event, basically a one-off temporary thing, not some underlying weakness.
Okay, good to know.
In fact, as they get Langeloth running more, especially using their own concentrate from Thompson Creek eventually, their working capital needs per pound are actually expected to go down.
How interesting. More efficient again.
Yeah, it just underlines that underlying financial strength and resilience.
Okay, so strong operations, well managed, good balance sheet, got it. But now, this next part feels really crucial to this whole undervalued idea. Beyond the mines, Centerra holds these other assets that maybe the market isn't fully appreciating. What exactly are we talking about here?
Okay, so yeah, looking at their Q1 2025 financials, they list marketable securities.
Right.
And as of March 31st, 2025, these were worth about $12.7 million US.
Okay, 12.7 million.
And the notes say these are specifically shares of publicly traded entities, recorded at fair value, standard stuff. But here's the kicker. These aren't just, random stocks they bought. We're talking strategic equity stakes. They own 9.9% each in Thesis Gold, Dryden Gold, and Azimut Exploration.
Ah, okay. So junior explorers, Thesis Gold, Dryden Gold, Azimut Exploration. These are companies with actual projects, potential discoveries.
Exactly. Thesis is up in BC with high-grade gold-silver potential. Dryden's got a big land package in a known Ontario gold belt. Azimut is a real player in Quebec, multiple gold and copper finds.
So they're recorded at fair value, standard accounting, fine. But, for you listening, does that number on the books, that $12.7 million, does it really capture the potential upside here?
That's the million-dollar question, isn't it? Or maybe the multi-million-dollar question.
Right. Especially with juniors like these, their value could change dramatically based on exploration success. It feels like there could be way more value there than just the current market price reflects.
Precisely. While, yeah, they're liquid assets valued at today's price, the real deep dive question is the market fully factoring in the long-term strategic value? The growth potential.
Right.
These aren't just passive investments. Owning 9.9% could lead to future partnerships, maybe even acquisitions, diversification, things that standard mining valuation often just ignores.
So the market sees the big mines, the current production.
Yeah, it focuses on the proven reserves,
Yeah.
the current cash flow of the main company. But these strategic equity stakes, they often get basically zero credit for their future potential.
Even though they're right there on the balance sheet?
Exactly. Tangible assets, but essentially invisible in the valuation for many investors. And that's a huge part of this potential undervalued story for Centerra.
That makes a lot of sense. It really is like finding a great house. But the listing completely forgot to mention the brand new finished basement with a home theater.
Oh, yeah, something like that. Value that's there, but just not highlighted or maybe even seen.
Okay, so let's pivot then. How does the broader market, how do the professional analysts actually see Centerra right now? Are they seeing this hidden basement, or are they underestimating it too?
Well, looking at the recent share price, Centerra was trading around $9.74.
Okay.
Its range over the past year has been between roughly $7.72 and $10.59. So it's sort of mid to upper end of that range recently.
But what about the analysts? What are they thinking?
Well, that's where it gets really interesting. The analyst community seems to see quite a bit more upside.
Okay, like how much more?
Well, TipRank shows the average price target from 7 Wall Street analysts over the last 3 months is C 12.99 cents.
12.99 compared to 9.74.
Yeah. That's a potential upside of over 33% from recent prices.
Wow, okay. That's a pretty significant gap between the current price and where analysts think it should be.
It absolutely is. And if you look closer at the ratings themselves, the sentiment is overwhelmingly positive.
Really?
Yeah. Out of the recent ratings, you've got 9 buy ratings, only 1 hold, and just 2 sells.
9 buys.
9 buys. And several big firms, Scotiabank, BMO Capital, RBC, Raymond James, National Bank, they've all reiterated buy ratings. Some have targets as high as C $15.07.
$15. Okay, so there's definitely a strong belief among analysts that this stock has room to run.
It certainly suggests that, yeah. It lines up perfectly with that undervaluation idea we've been discussing.
But are they just being, optimistic? Or does Centerra have a history of actually meeting or beating expectations? Does the track record support this confidence?
Well, they do have a pretty solid track record, actually,
Yeah.
which definitely adds weight to those analyst forecasts.
How so?
Over the past year, Centerra beat the earnings per share, the EPS estimates, 50% of the time.
Okay, half the time. How does that compare?
Well, it's better than the overall industry average, which was about 40.9%.
Yeah.
And they did the same on sales estimates, beat them 50% of the time, compared to the industry's 39.7%.
So better than average at hitting their numbers.
Exactly. It shows a company that tends to deliver. And looking ahead for the next quarter, analysts are forecasting earnings of $22 and sales around $409 million. So continued positive expectations there, too.
Okay. Now, alpha spread, one of the sources we looked at, they often discuss these broader investment ideas, like economic moats or shareholder yield. How does Centerra kind of fit into those concepts?
Right. So the economic moat, that's Warren Buffett's idea,
Right.
about a company having a durable competitive advantage, something protecting its profits.
Like a castle moat.
Exactly. Now, alpha spread doesn't explicitly slap a wide moat label on Centerra, but you could argue that the improvements at Mount Milligan, aiming for those 10% cost savings.
The M Plus program.
Right. That's exactly the kind of thing that builds a moat, or at least strengthens it. Optimizing recovery, cutting costs, those are classic ways to create a competitive edge that's hard for others to match. It makes that part of their business more resilient.
Oh, okay, that makes sense. What about the other side, like shareholder yield or dividends?
Well, on that front, alpha spread actually gives Centerra's dividend safety score a very unsafe rating.
Ooh, very unsafe. That doesn't sound good for dividend investors.
No, it indicates pretty low confidence that the current dividend is sustainable or reliable. So yeah, if you're an investor focused purely on getting those regular payouts, that's definitely something important to note.
But maybe less critical if you're focused on the undervaluation angle.
Exactly. If your investment thesis is built around capital appreciation, banking on the market, eventually recognizing the full value of the operations and those strategic investments we talked about, then the dividend safety is probably a secondary concern. The potential upside from a re-rating could far outweigh the dividend yield anyway.
Okay, so wrapping this all up, we've taken this deep dive into Centerra Gold. We've seen the strong operational foundation, the pretty significant cash pile they're sitting on.
Nearly $650 million.
And the analyst community seems quite bullish, seeing significant upside.
Yep.
But crucially, we also explored this potential hidden value, the marketable securities.
Right, those strategic stakes in Thesis Gold, Dryden Gold, and
Investments in publicly traded juniors that represent real potential future growth, but maybe aren't getting fully factored into the current share price.
Yeah, the picture that really comes together is one of a company with solid fundamentals, management that's actively improving efficiency.
Like at Mount Milligan.
Yeah, and the Molly business strategy.
Yeah.
Plus, this clear analyst consensus pointing towards a higher valuation. It really does feel like the market might be missing a trick, especially on those strategic investments.
So when you consider everything, the improvements at Mount Milligan, the molybdenum strategy, the strong analyst backing, and especially that uncredited potential from owning 9.9% of Thesis, Dryden, and Azimut, you really have to ask yourself, is the market truly seeing the full picture of Centerra Gold's value right now? Or is there actually a pretty compelling case to be made that Centerra won't stay this cheap for much longer?
It's definitely food for thought.
Yeah.
But as always, this deep dive is purely for informational purposes. It's based only on the sources we talked about. We are definitely not giving investment advice. You should always, always do your own homework.
Your own deep dive.
Exactly. And talk to a qualified financial professional before making any investment decisions.
And just remember, past performance doesn't predict future results. Investing always, always carries risk. Thanks for diving deep with us today on Centerra Gold.